We are so looking forward to discussing the new report coming from the CFI Fellows program called Delivering Financial Capability, a look at business approaches. We have Justina Pytkowska on the line. She was our CFI Fellow for the past year, coming from Microfinance Center of Poland. But before we turn to her, I just have a few things that I'd love to take care of to make sure that we make the best use of this time we have together. So before we get started, let me just project up on the screen here a screenshot that we took of the GoToWebinar platform, just so you have a sense for how you can actively participate in this discussion. So you'll see on the right-hand side of your screen, there's a window, and we're blowing it up here. You can see in this window that there are a few functions I want to point out. One is the little hand function, and that is an icon you can click and you can raise your hand during the discussion. Right now we've put everybody on mute just for the sake of controlling background noise, but that doesn't mean we don't want to hear from you. So make sure to use that liberally. Feel free to press that hand icon, and then we can unmute you during the webinar, during the conversation, so that you can ask a question or make a comment. I also want to note the questions box. So there's a question box there at the bottom of the screen. You'll see a note from Neil Kennedy right there that says about this. Thanks for joining us, and the webinar should be starting now. And if you type your question in there, Neil will be able to get right back to you. Some people that we talk with have low bandwidth, or they might be in a place with a lot of background noise, and so you can feel free to ask very substantive questions about the material in that box, and I'll be sure to relay that question to our fellow Justina during the webinar. So I hope that that's clear. If it's not, feel free to raise your hand or use the question box to ask a question. Before we get started, I'd love to put up a poll on the screen to better get an understanding of who we're talking with today. So we're going to put up a number of categories that are probably not completely inclusive, but please select one of these following categories. The first is government or public sector. The second is private sector. The third is development organization. The fourth is academia or think tank. And recognizing that these might not be completely inclusive categories, the fifth selection is other. So go ahead and make that selection. Looks like we've got responses coming in from many of you. Keep it open for another 10 seconds. Great. Well, why don't we go ahead and close that poll and put up the results so that we can see who's with us this morning. Looks like most of you are from development organizations or the private sector. So far today we have nobody from the government sector, so I think we can be a little bit more free with our conversation. Just kidding. And a number of people who have self-identified as other. Let's go ahead and put that second poll up on the screen just so we know where people are calling in from. So again, these are not completely inclusive, but go ahead and make that selection. The first is Asia and the Pacific. The second is Europe and Central Asia. The third is Latin America and the Caribbean. Fourth is Middle East and North Africa, and the fifth is Sub-Saharan Africa. And we're asking about where the primary focus of your work is. If you are from a place that is not listed on this list, or if the primary focus of your work is in a place that's not listed on this list, for example, North America, feel free to abstain from answering this poll. I just want to give a caveat. We only have five places we can put in answers for this poll, so I realize these are not ideal, but hopefully we'll get a good sense of our audience. So let's go ahead and close the poll and put up those responses. Looks like we have a really nice mix, 30% of people coming from Asia and the Pacific, and I'm so glad because oftentimes we're not able to get folks who are focused on Asia and the Pacific just because of the time of our webinar. So I'm glad that we had this one a little bit earlier. And then an even split between Latin America and the Caribbean, people focusing on Middle East and North Africa, Sub-Saharan Africa, and then 10% from Europe and Central Asia. That's great. Well, let me just make a couple notes. One, we're recording this session and we're sharing it out on our website afterwards for those who want to participate but were unable to do so. And then second, I just want to reiterate for you, those of you who just joined us, in your control panel it's usually on the right side of your screen. You can feel free to raise your hand. There's a little hand icon that allows you to note that you want to say something, and then we can unmute you if that's the case. Or you can open the questions drop-down menu and go ahead and ask a question, or talk in the chat, and that will go right to Neil Kennedy, who is manning our questions here, and will be relayed to me so that I can make sure to integrate your questions into the webinar. Let me just introduce myself briefly. I'm Sonia Kelly. I'm the Director of Research at the Center for Financial Inclusion. The Center for Financial Inclusion, for those who are unfamiliar, is a think tank whose goal is to challenge and engage the industry to protect and empower consumers. We're focused on the financial services industry and really trying to push the financial services industry to pursue financial inclusion in a meaningful way. The Fellows program was started at the Center for Financial Inclusion over 2 years ago with the goal of encouraging independent research and analysis on some of the questions that we identify as sort of frontier questions in financial inclusion, questions that will really move the needle on financial inclusion that haven't been answered yet, and that frankly, even we at the Center for Financial Inclusion don't know the answers to. So we, for our Fellows program, we put out a request for proposals. People from all over the world submit proposals to our program. We have a committee that makes selections, and then we're able to fund really interesting, meaningful research around the world. And the report that you're going to hear about today comes out of the Fellows program. Let me introduce to you now Justina Pytkowska, one of our fellows this past year. Justina comes from the Microfinance Center of Poland, where she manages research projects. She's worked on this topic of financial literacy and financial capability at Microfinance Center of Poland, which makes her well positioned to look at this question of what the business approaches are to financial capability. She conducts market research studies in demand for microfinance products, so she's not unfamiliar to demand side surveys, and she looks at access to finance, use of financial services, indebtedness, and uses a variety of research techniques. I'll let her talk a little bit more about her methodology for this report and her findings in a second, but let me just make a quick personal note. I have just really appreciated Justina's approach to this question. This question was one of the most difficult that we posed at the start of the Fellows program in 2016. And this came out of Center for Financial Inclusion's work on financial capability in recent years, where we put forward a framework on what behaviorally informed approaches to financial capability are. But then we heard from practitioners that we didn't have an adequate value proposition for them. They were telling us that we weren't explaining the business case in a way that would motivate them to adopt approaches to financial capability that were different than the ones that they were using. So this question was very difficult. We started by asking, what is the business case for financial capability? And Justina very nicely honed that question in a more researchable direction. And I really appreciated the way that she was able to frame the question in a productive way and to come up with useful conclusions. And we'll talk about that at the end of the presentation. But now let me turn it over to you, Justina. We have your slides all loaded, and we're looking forward to hearing the summary of your research.
Hello, everybody. I'm pleased to be here today to present the results of my study on business approaches to delivering financial capability interventions. So can I have a slide about introduction? Yes. Okay. So my presentation will consist of 3 parts. First, an overview with an introduction and the presentation of the selection of cases. Then the third part, in the second part, I will present the results, the overall findings and the strategies for financial survival. And in the third part, I will present the conclusions and will open the floor to questions, answers, and to the discussion of the topic. Next slide, please. So as an introduction, over the years here at Microfinance Center, we've been observing and supporting microfinance institutions in delivering financial capability interventions. And what we've observed that many institutions are interested and want to help their clients to build financial capability. However, many of them fail to scale up the pilot projects or integrate them into the core business of financial services delivery. And in this study, we examined business approaches to the provision of financial capability programs, and we looked at microfinance institutions in Europe and Central Asia. And in the course of the study, we identified viable approaches and reviewed various strategies and identified 6 strategies for financial services that the institutions apply. Next slide, please. So we've selected 6 cases, but before we did that, we looked at the range of financial capability interventions, and we looked first of all how the MFIs deliver different types of financial capability interventions. Because what we saw was that MFIs either focus on personal financial management, so they try to teach people how to prepare the family budget. They try to support them in saving and responsible borrowing behavior. But there are also institutions which focus on business financial management, that is on business plan writing, doing the accounting or cash flow management. Then secondly, we looked at a range of interventions, and we looked at institutions which did the information sharing, like brochures, leaflets distribution, or the media campaign. We also looked at institutions which provide mass education through classroom training or e-learning courses. And we also observed institutions which provide individual education through mentoring and counseling. And the third dimension was the delivery model. So we are looking for institutions which deliver financial capability interventions in different ways. For instance, through the parallel model, where there is an educator in the MFI who works together with the loan officer or in parallel with loan officer in delivering non-financial services along the delivery of credit. In the unified model, we identified institutions where the loan officer was the educator. And in the linked model, we found the institutions which cooperate with NGOs or other types of institutions which deliver financial capability intervention. And the MFI is engaged in only delivering financial products. Next slide, please. So, as I mentioned, we've selected 6 examples of institutions and programs delivering financial capability interventions. And the first one was ADI in France, which is an association which provides microcredit and focuses on supporting people who are unemployed, who are out of the banking system and want to start their own business to create their own employment. And ADI focuses on business financial management interventions, and they have a training program for young people, Creation, and also they have a mentoring program for their current borrowers and short videos which allow people to understand how to run a business. And then we have Permicro from Italy, a microfinance institution which also works towards promotion of social inclusion and employment. They are a microcredit provider, and they work together with an NGO, Permicro Lab, to deliver business financial management, financial capability interventions. And similarly to ADI, they have a training program for young people in which they help young people understand how to open and run a business, and they support young people in writing a business plan. And additionally, they have mentoring for their clients, their borrowers. Next slide, please. Then the third case is Credits from Netherlands, which is a microfinance institution which works towards creation of new businesses, startups, and the development of existing businesses. So their focus again is on business finance management. And what they do is they have a training program, Eigenbass. It is Be Your Own Boss program, where people learn how to write a business plan, how to manage finance and accounting in the business, how to write sales projections, and how to do human resources, how to manage human resources. And they also have mentoring program for their clients and online training courses. Then the fourth case study is Humo from Tajikistan, an MFI which serves low-income people in rural areas, and they have a variety of financial services, not only credit, not only business and personal loans, but also deposits and money transfer services. And Humo focuses on personal finance management. So they support people in learning how to save, in responsible borrowing, in managing their family budget. And they do so through information sharing. They have video spots, posters, leaflets, and brochures on personal finance management, and they also do classroom training and counseling sessions, and these are delivered by their loan officers. The next slide, please. The fifth case is KMF, the largest microfinance institution in Kazakhstan, which works with low-income people in rural areas, and they provide loans, business, agricultural, and consumer loans. And KMF has two types of financial capability programs. The biggest one is relating to the personal financial management, but they have recently introduced business financial management courses for loyal clients. And so they basically do classroom trainings, but in addition, they have video and audio lessons which are online and can be and are a tool for self-education. And this is supported by information sharing through brochures and posters and other online resources. And finally, the sixth case study is the Borrow Wisely campaign, which is an awareness-raising campaign on responsible use of credit. And this campaign is implemented by about 20 MFC members from the ECA region, and it is implemented every year in October. So it is active now. MFIs in this campaign focus on personal financial management, and their staff, mainly loan officers, but also other staff in branches. They distribute informational materials such as leaflets, brochures, but also show video spots in branches about principles of responsible borrowing. Next slide, please. So these are the 6 cases, and now going to the results. Let's have a next slide with the summary of cases. So our selection of cases represents the spectrum of financial capability interventions in terms of delivery models, content of the intervention, and type of the intervention. And here in light orange color, we have institutions program which refer to personal financial management, and in dark orange, business financial management. So here we have two cases of personal financial management, HUMO, which delivers trainings and counseling, so they do mass education and individual education, and this is delivered by loan officers, so HUMO represents the unified delivery model. The second example of personal finance management is the Borrow Wisely campaign, which is about information sharing. And because it is done by the loan officers, it is also the unified model of the delivery. And then we have a case of KMF, which delivers both personal and business financial management program through a unified model. So loan officers and other branch level staff organize trainings and distribute leaflets and other informational materials. Then we have three cases of MFIs which provide only business financial management programs. These are ADDI and Credits, which deliver training and mentoring using a parallel delivery model. In this model, financial capability intervention is delivered by the educators, so they have mentors for educating people, not the loan officers. In case of PerMicro, here we also have the business financial management, mass education through training and individual education through mentoring, but the program is delivered by a partner institution, an NGO called PerMicro Lab. So the external institution manages and delivers the financial capability program. Next slide, please. So in the course of the revision of those cases and their approaches, business approaches to delivering financial education, we have identified 6 strategies. The first one is about generating income from fees and services or materials relating to financial capability. Then we identified grants and subsidies as a source of revenue to cover the cost of financial capability interventions. Then the third strategy is to absorb the costs into the marketing or corporate social responsibility budget. The fourth strategy is to integrate financial capability interventions into the credit process and routine work with the clients in delivering financial services. The fifth strategy is to share costs with other institutions by forming partnerships. And the sixth strategy is to use volunteers to deliver financial capability interventions. The next slide, please. So the first strategy, generation of income from fees and services and materials. And in this approach, the MFI, here Credits from Netherlands, offers fee-based financial capability services. And what they do is that they sell financial capability services such as mentoring and e-learning modules directly to their customers. So the customer can purchase access to an e-training course, for instance, on how to do accounting, and they can go through the course themselves. They can pay for the services of the mentor. And also these e-learning packages coupled with the lectures and other sessions in the Eigenbus program are sold to vocational schools, universities, and other partner institutions. So the services are sold not only to clients, to the borrowers from credits, but also to the other institutions, educational institutions, and also to the other MFIs, which can use the e-learning modules to work with their own clients. And in case of credits, the activities relating to financial capability program are managed by the mentoring department. It's a separate cost center, and this way the costs of delivering financial capability activities can be well tracked, separated from the cost related to the financial services provision, and this way credits can adjust their pricing strategy to the cost structure. And what are the pros? So first of all, it's a good source of revenue, stable source of revenue, because the fees from financial services to clients can be predicted and adjusted to the demand for these services. Secondly, the MFI presents a consistent approach that is fee-based approach. So clients know that they have to pay for services, for financial services and non-financial services. And even though mentoring is it's fee-based, but it is subsidized, so the cost is not very high, but still clients have to pay for this. And in this way, clients are not confused whether they have to pay or is it for free, and it's quite a consistent approach. But there are cons for this approach. First one is that even if the non-financial service is of low cost, it is still a cost to the client. So the clients have to pay more than for the financial service without any mentoring. And clients may be reluctant to pay for the service, especially if they can get access to some educational training courses or other types of interventions that are delivered for free. For instance, in some countries, municipalities or NGOs offer free training courses. And thirdly, clients may be reluctant to pay for services of unknown quality because the MFI is a deliverer of financial services. So clients may question the quality of educational services of the MFI, as the educational activities are not core business of this MFI. Next slide, please. So the second strategy, grants and subsidies. Here we have the example of 3 institutions, ADI, Permicro, and Credits. And they use donated funds to develop or deliver financial capability interventions. So MFIs with access to grants and subsidies can deliver free or subsidized services to their clients, thus they don't burden the clients with additional costs. But the obstacles to this approach are, first of all, that grant sources are usually limited. Secondly, this is an unstable source of funding because strategies of donors and other supporters may change over time, and the donor may not be interested anymore in providing grants to support financial capability programs. Additionally, the number of potential grant sources is limited due to high competition. There are many organizations which try to get funding from donors and other supporters, so it is not always sure whether this MFI gets the next round of grants or not. And also the getting grants and subsidies requires constant contact and fundraising activities, which is quite an effort for the institution. The next slide, please. This strategy refers to absorbing the costs of financial capability activities into the budget for marketing activities or the budget for corporate social responsibility activities. And here we have two cases of KMF and HUMO, and they cover the costs associated with the delivery of financial capability interventions with their profits earned from delivering financial services. And in covering the costs of financial capability interventions, they can reduce the dependence on external sources like the donor funding or fees for provision of services. So they can be quite independent in that. Also using own profits to finance the intervention reduces the burden of seeking external finance. But there are also cons in this approach. The main one is that the allocated amount of money on financial capability interventions depends very much on the budgetary decisions of the decision makers or the shareholders of the MFI. So one year they may be willing to allocate a large portion of the budget, the other year they may have different priorities. And also the amount can change from one year to another depending on the amount of the profit that the MFI generated in the past year. So again, the amount allocated may be quite unstable because of changes in the profit levels. Next slide, please. This strategy refers to reducing the cost of financial capability delivery. And here we have the example of HUMO, KMF, as well as Bobo Wisely campaign. And in this approach, the MFIs try to integrate the activities relating to financial capability into the daily work of their credit staff, loan officers, branch managers, or other people, staff who are engaged in the delivery of financial services. So this way they try to make this cost a marginal cost, as the loan officer does not have to spend too much additional time on delivering financial capability. He does this during his work and his routine meetings with the borrowers. And also a great advantage from the impact side is that financial capability is delivered in the teachable moment, at the time when the client makes financial decisions, when he thinks of his finance. This way, the loan officer can pass to him important messages and influence the behavior of the client. And also in this approach, when the loan officer works with the client and knows the client and his financial situation, he can well adapt the messages to improve financial capability in the weakest area of the client. So again, it can have a higher impact compared to the other types of interventions. But the drawbacks of this approach are, first of all, that loan officers or other staff have uneven teaching techniques, skills rather. So some may be good educators, the other may be not such good educators. So they may have knowledge, but not necessarily skills to pass this knowledge to the clients. And then the loan officer, the work of the loan officer is financial services delivery. So education, financial capability will always be the second priority for the loan officer. In some cases, some MFIs have targets in terms of financial capability interventions for each loan officer, the same as they have targets relating to credit delivery. But if they don't, then the loan officer will always choose to work with the client on financial services rather than on financial capability. Then there is a difficulty in monitoring the activities of the loan officers because financial capability intervention is delivered integrated with the credit delivery process, and it is difficult for the MFI to really know whether the loan officer delivered financial capability or not. And also it's difficult to evaluate the quality of the work of the loan officer exactly because of that, because it is so much integrated with financial services delivery process. The next slide, please. So this intervention relates to sharing costs of the preparation and delivery of financial capability intervention. And here, Borrow Wisely campaign is a good example because it is prepared and delivered in partnership of several institutions with the microfinance network, in this case, Microfinance Center, MFC. So the role of the network in this project was to propose a common framework for the campaign, develop customized materials, prepare monitoring and evaluation methodology and tools to conduct the evaluation, as well as analyzing the results of the campaign. So the MFC prepared the templates of brochures and leaflets, and through the consultative process with the 12 MFIs participating in the campaign at that time in 2014, they worked out to compromise the materials that were suitable for all the MFIs participating in the project. And these templates were prepared in the way that each MFI could translate the texts and insert the text in their local language, and could also adapt the size of the font, and they could also rearrange the graphics, the visuals, to better suit their needs and preferences. And then the role of each institution, each MFI, was to implement the campaign and cover the costs associated with the implementation, like the costs relating to adaptation, like translation of the materials, printing the materials, the cost of the staff engaged in the project, in the delivery and monitoring and evaluation. MFI then asked all the MFC then asked all the MFIs to send the results of the data from the evaluation, and MFC did the analysis and presentation of the results, which helped the MFIs understand how clients like the campaign and what were the suggestions for the improvement of the campaign. And so the obvious pro is that the costs were smaller when working together. The costs further on, some of the costs were covered by MFC. The other advantage was that there was a synergy effect, as the campaign was conducted during the same month of the year. So when there were several MFIs from the same country participating in the project, then the campaign had a bigger outreach. But the cons, the disadvantages of this approach was that there is only one set of tools, one brochure, one leaflet for all the MFIs in several countries. So although MFIs were able to adapt it to some extent, they were not able to really change everything. So some messages were more relevant and some messages were less relevant to the context of the country. So the space for customization was a bit limited. The next slide, please. So the final strategy here is the use of volunteers. And the use of volunteers was seen in 3 MFIs, AD, Permicro, and Credits, who engaged volunteers in delivering financial capability activities which require high intensity of work on the side of the educator and the client. So volunteers were mainly mentors who worked with the clients before obtaining the loan and after obtaining the loan, during the loan term, and sometimes even after the loan term. And volunteers are mentors who are mainly bankers, accountants, tax advisors, but also active or retired entrepreneurs. And volunteers in these institutions are recruited in various ways. For instance, Permicro uses electronic media such as a website or LinkedIn to recruit volunteers. AD, for instance, organizes national campaigns, week-long campaigns in several locations to attract volunteers. And Credits has a dedicated staff person for building and maintaining the relationship with institutions such as banks, accountant offices, or audit companies, audit firms. The staff of these institutions is likely to be volunteers. So the biggest advantage of this approach is the cost reduction. As I mentioned, volunteers who act as mentors perform the activities that would otherwise be very costly if the MFI wanted to hire a professional mentor, expert in banking, accounting, or financial management. They would have to really pay a very high price. And the other advantage is that those mentors are highly professional experts in the areas of financial management, so they can provide very high quality advice and support to the entrepreneurs. And in case of volunteers who are entrepreneurs, then they can provide advice from their own experience in establishing and running their own business. And the disadvantages of this approach are that those mentors, although they are highly professional in their area of expertise, may not be very good teachers or mentors. So they may not have the means to pass the knowledge to the clients of the MFI. And also because they are professionals, they have permanent jobs, they have limited availability to provide services. And also because of that, there is high rotation. Some people can be volunteers only for some time and then they resign and the MFI has to look for new volunteers. So working with volunteers requires high effort on the MFI side to maintain the contact, to recruit volunteers all the time, and also to help them upgrade their mentoring skills. Some MFIs organize trainings for mentors. Some MFIs like Credits has an e-learning course for mentors. Permicro, for instance, organizes the meetings and opportunities for mentors, for volunteers to learn from each other and to provide peer support to each other. But this all requires quite a lot of effort to maintain volunteers in delivering financial capability interventions. Next slide, please. So now going to conclusions and questions and answers. So having analyzed these cases and identifying the approaches, we conclude that financial capability programs can be delivered in a sustainable way, although we saw that often costs are subsidized or partially covered, for first of all through direct subsidies such as grants, and through indirect subsidies such as in-kind contributions, mainly through volunteer work. We also observe strategies to reduce cost, and these strategies include integrating financial capability activities into the activities relating to credit provision. Also, we saw that the way to reduce cost is to transfer the costs to other institutions or individuals, or to cover the costs with revenues from selling services. What we also observed is that it's quite difficult for the MFIs and also for the researchers to conduct full profit and loss analysis relating to financial capability interventions. In fact, we haven't found any MFI which could do such full analysis. And also we saw that none of the MFI really looks at costs versus benefits. So while many MFIs realize that financial capabilities activities are important for them to conduct, they observe that clients benefit from participating in the courses, from working with the loan officer, from listening to their counseling or advice. The MFIs don't do the analysis whether the costs incurred in provision of financial services bring any substantial benefits. So from our point of view, these two, like profit and cost analysis and cost benefit analysis, would be the important next steps to understanding better the business approach to financial capability delivery or interventions. So these were our conclusions, main findings and conclusions of the study. And now I would like to invite you to ask questions, to comment on the findings, and I will be happy to discuss and answer the questions.
Great, thank you so much, Justina. We've already had a few questions roll in, and for those of you who joined us midway through the presentation, I wanted to reiterate that there are two ways that you can ask questions. You can press the hand icon that's on your side panel, or you can put a question in the questions drop-down menu, and Neil Kennedy at our office here is standing by to take your questions. I wanted to mention before we turn to some of the questions that we already have, that in the handout section of your drop-down menu or of your app, you'll see the full brief, and you can go ahead and download that right now if you want to, or open it and scroll through it in the time we have left. It really is a great resource. And I also wanted to mention and celebrate that today is European Microfinance Day. So our conversation highlighting some of the ways that European microfinance institutions and initiatives have pursued financial capability is very timely today. European Microfinance Day is a day when thousands of microfinance professionals get together to raise awareness about the importance of microfinance for job creation and for social inclusion. And this is just one of the many events that are happening today as part of European Microfinance Day. So let's go ahead and turn to some of the questions. One thing that one of our listeners, Justina, emphasized is the focus on what determines quality of intervention. So it's clear that in your research, you assessed quality and what is a higher quality and a lower quality financial capability intervention. Augustin Akowa asked about funding, where funding comes from and how that influences quality. And his hypothesis is that when funding comes from an outside donor, quality might be lower just because the outside donor does not necessarily have the incentive to care about the quality of these kinds of interventions. So I wonder if you can respond to that.
Well, first responding to the second question, we have to distinguish between two types of engagement of donors in financial capability. One is donor-driven, when it is the initiative of the donor to introduce financial capability interventions in the MFI. And the other is that the initiative is at the side of the MFI, which recognize the importance of building financial capability of their clients. And the MFI has the initiative to introduce the program and seek funding from donors. So in the second case, when it is the MFI which is interested in conducting financial capability activities, the quality is usually higher because it is in the interest of the MFI to improve financial capability of their clients. So it does not depend on the donor wish, it depends on the MFI persistence in improving the quality. Usually the quality is lower in the beginning because the MFI has to learn how to do it. The loan officers or other types of educators have to learn how to deliver it. So the quality may be lower in the beginning, but later on, after several iterations of the program, several years of the implementation, the MFI learns how to do it so that the intervention itself is of high quality, that it addresses the needs of the clients, and it is delivered in a sustainable way. So MFIs may resign from some types of activities which are costly or which are of low interest of the clients or which bring low results. The MFIs that we looked at conducted several studies, or they interviewed their clients about the relevance of their programs to the needs of the clients. So MFIs are in constant touch with the clients, learning what their needs are, how they perceive the project delivery, what they like, what they don't like. And this ensures the quality of the service.
Thanks, Justina. We have a number of other questions and only 10 more minutes left to ask them. So we'll try to move through them a little bit more quickly. I'd like to unmute Maria Jaramillo. Maria had a question about some of the effects of these interventions in terms of how staff responded. Maria, are you there?
Yes, good morning. Can you hear me?
Yes, go ahead.
Yes.
Great, thank you. I wanted to ask you, how did loan officers react to the request of integrating financial capability activities into their current role and their daily activities? Did they embrace it, or how did they respond to that?
I mean, first of all, this is always a change to the work of the loan officer. So it's not always easy for the MFI to tell the loan officer that he has to do some additional activities not related to product delivery. But over time, we saw that in fact, loan officers are quite like delivering financial capability. First of all, because it helps their clients. So it helps also the loan officers, not only in terms of the portfolio quality, but more aware or educated client with better financial behavior is a better client. It's easier to work with such clients. Less time spent on explaining everything for the 10th time. So over time, loan officers start to appreciate what they deliver to the clients. And also in many MFIs, loan officers deliver some kind of advice anyway, even without the program. Loan officers often advise their clients without being pushed or motivated by the MFI or by the branch managers. They do it anyway. So when they have a chance to do it in an informed way, when they go through the training and better understand how to do it, they often appreciate it more.
Thank you. That's wonderful to hear.
Great. Let's go ahead and unmute Ethan Lewfield. who's joined us. Ethan, I think you have a question. Ethan, are you there? All right, well, while we work on getting Ethan on, there's another question that came in from Maria Orduz. Maria, I'd love to get you on the line. And when you're unmuted, go ahead and, are you there, Maria? I can hear you.
Hi, this is Lisa Guzman. I'm chatting from Maria's computer.
Oh, hi, Lisa, go ahead.
Hi, well, I think you already saw my question. So thank you very much for the presentation. It's very interesting to see all your findings. So I have two questions, maybe very basic ones, but I'm just curious to know, what do you think none of these institutions are measuring results or measuring cost benefits results?
Not really. I mean, they have a general feeling that there are benefits, but mainly by understanding the client level of satisfaction and appreciation of the program, but they don't do rigorous analysis. So when we asked them about the benefits to the client and benefits to the institution, they were not able to come up with concrete answers like the numbers or the trends over time. So they do not really rigoristically measure the benefits. It's more like the qualitative way of understanding that this is good for the clients, and clients like it and come to the trainings, you know, because the biggest challenge always is to attract people to the training, to sit in the classroom and to listen, and to even more, what is more difficult, to be actively engaged, not just to listen, but actively participate. But it turns out that there is interest. For instance, in case of KMF in Kazakhstan, people really do come to trainings. They want to learn because people often run enterprises without having any knowledge. So they appreciate coming to the short training and learning something about running the business.
Yeah. So yeah, I'm just asking because yeah, it was surprised to me to see that like if we are talking about like the business case for financial capabilities, they are not really measuring it. So they
they're not. No.
They are not.
I was surprised too.
Seeing a real, I mean, apparently like a real value for business purposes. But okay, thank you. That's a very good.
I mean, so in some way they measure benefits, but they don't match them with the costs. So they then don't try to seek for like the better balance between costs and benefits. They don't do that.
Agree. Thank you. And just a very another basic question, perhaps, but I'm a little confused because some of the interventions that you're describing here, for me, are more like traditional financial education interventions and not necessarily financial capabilities building intervention, because of the way that they are delivering, right? Like you're talking about like people giving other people like education on concepts and that's it, but not necessarily linked to behavioral change. So I'm just curious to know, like, your understanding, like, why do you put them both together under financial capabilities?
Yes, in case of mentoring, this is kind of financial capability intervention, because the mentor works with entrepreneur for a long time, like half a year or 1 year, and they respond directly to the needs at the time when the entrepreneur has to make a decision, is unsure about things. So mentors are able to influence the behavior of the entrepreneur. So I would say that these are pure financial capability interventions with the objective to change the behavior. Same with counseling. What HUMO does is the loan officers do counseling. So they advise people how to change behavior, how to start saving, how to create a safety cushion. So when loan officers advise on taking a loan, at the same time they advise people to create reserves. So this, because it is in this moment of the credit decision, they are more likely to influence the behavior than elsewhere, like in any other time. in case of training, it is more difficult to capture the change in the behavior because people after the training go away and then they are not followed. But our region is, I would say, quite specific in terms of the intensity of delivering financial education trainings, because many people are educated in this region from college or university education, but so they are used to being trained, and they are used to going to classrooms and learning and using this knowledge, and they lack very basic business management knowledge and skills. And because people are generally educated, they are able to translate education into skills more easily rather than uneducated people. So although we do not have information about the impact of training on behavioral change, I'm of the opinion that it has the chance to act like this.
Great, thank you, Justina. I want to recognize that it is the top of the hour, but there are so many great questions that have come in that I'm planning on extending this webinar another 15 minutes. For those of you who can't stay with us, I want to make sure to mention that the handout in the handout section of your webinar platform is there with the final report, and you can go ahead and download that. Thanks for those of you who have to leave. Thank you so much for joining us for this event, Delivering Financial Capability, a look at business approaches, which happens to coincide with European Microfinance Day. And we celebrate and want to underscore the importance of microfinance today for job creation and social inclusion. For those of you who are able to stay on, and I see that most of you have actually stayed on, thank you so much. We're going to just extend this another 15 minutes because of the quality of questions that we've received. Let's go ahead and open the line back up to Ethan Lewfield, who I know is troubleshooting his line on his end. Ethan, are you on?
Yeah, can you hear me now?
Yep, go ahead.
Okay, perfect. Yeah, thanks. I guess my question just relates to, I wondered about how far reaching these kinds of financial capability interventions are. And so this could have been something that was in the brief, but what is the reach of the interventions in terms of the number of clients that these case study MFIs have attained? And then also at a higher level, how many MFIs out there actually even attempt to offer these kinds of financial capability interventions in terms of just maybe a percentage, what share of them actually even attempt to do this?
So answering your first question, the outreach depends on the strategy and the type of intervention. So for instance, with Borrow Wisely campaign, which is a media and information sharing campaign, there are like 400,000 participants. And so it's quite large. In terms of other interventions, they are usually limited to the borrowers, so the outreach depends on the number of borrowers. So for instance, Humo is an MFI which serves over 100,000 clients. So the outreach of counseling would probably be around this number. Maybe a bit less, maybe not all clients receive counseling, but the MFI tries to reach to all clients. But other types of interventions like classroom trainings, usually they are very limited in the number of participants, except of KMF. This one MFI specifically provides training on a large scale, so they reach like 70,000 clients with training. That's clients and potential clients, more like people from the target group from the rural areas where they operate. So I would say that the outreach depends on the strategy or the type of intervention. It is usually limited to the clientele of the MFIs, with some exceptions, like Borrow Wisely campaign, which is a campaign of large outreach, and except of one MFI, which aims at delivering training at a mass scale.
Great.
And to answer your second question about the number of MFIs, we have observed that many of MFIs, like every second MFI, tries to incorporate financial capability program into their operations, but many of them fail to continue. So it very much depends how you count the MFIs. Whether you're more interested in knowing how many at the moment or how many ever tried to do that and delivered financial capability programs at some point of time.
Unfortunately for us, that means that there's a big audience for this kind of research. I mean, it sounds like with your back of the napkin assessment of about half of the MFIs that you work with exploring financial capability, that's really significant. So figuring out the business case and business approaches is critical to success. Let's turn now to Obina Nkwocha. Obina, are you on the line? Can you hear us?
Yes, I'm on the line. Can you hear me?
Yes, go ahead.
Yes.
Okay, and this is just a follow-up question. And first of all, thank you for the presentation. I think it was very, very clear, and I've learned a lot. But I have a follow-up question regarding, I was just wondering if you actually gained any insight as to why the MFIs were not conducting impact assessments. Was it as a result or evaluation of their programs? Was it really as a result of lack of technical skills or finance, or it was just sheer negligence on their part?
It's lack of skills to do it at low cost, because rigorous impact assessment studies are very costly and quite intensive, with quite intensive involvement of the staff of the MFI, because it requires a research program which lasts about 1 year and which involves large numbers of clients, like 1,000 clients in the treatment group, 1,000 clients in the control group, and the impact study is like observing the program and comparing the results in the intervention group as to the control group. So it's costly, it's time consuming, and requires high level of engagement of the staff. And I haven't seen any studies of this type relating to financial capability. There are even only few studies of this type in our region relating to the impact of microcredit on the well-being or the business results of the clients. So such studies are rare, but I was surprised to see how little MFIs do in terms of assessing the benefits. I would expect that the MFI is not even mentioning impact. I was surprised to see that they don't look so closely at the benefits, and I think it's not negligence. I think it's lack of expertise how to do it. So as long as clients are satisfied and as long as the MFI knows where to improve, they don't do any more research or understanding of the benefits.
Yeah.
Thank you.
I'd love to turn now to talk a little bit about innovations in financial capability. And on the line, we have Leslie Puth, who asked a question about innovations like chat bots or artificial intelligence, other things that are being used in financial capability interventions. Leslie, are you there?
Well, hi. Yes,
hi.
here I am.
Great. Hi, Leslie.
Hi. Sorry to have joined late. I actually got stuck in an elevator for the first time in my life. It was a little scary. But my question was, if you're seeing any innovative sort of low-cost adoptions being discussed, like chatbots, where individuals could receive, kind of reinforcing suggestions or reminders to help them improve their financial capability.
We saw, for instance, the example of credits. What we see is that first of all, they use online platforms for interacting with the clients in credit delivery, and they also use the platform for connecting entrepreneurs with mentors, for establishing the relationship, first of all for choosing the mentor, for establishing the relationship, and then for the follow-up work. So while mentors meet with the entrepreneurs and have face-to-face discussions, they also communicate via email and through the online platform. So here is the example of the use of technology in delivering financial capability intervention. Credits also have online courses, training courses. So a person can go through the online course where there is a mix of short films with examples, lectures, and the opportunities to complete the assignments. And so these e-learning courses are quite interactive. For instance, the business planning course is not only the training course, but a tool to complete the business plan. So the participant, when completing the exercises, eventually comes up with his own business plan. So, so this kind of e-learning course was developed by Credits. The other MFIs have also online resources, but they are more like passive, like video spots or brochures, online brochures or audio lessons, but they are not very much interactive. So they use a technique to deliver financial capability interventions, but it's more like giving access to the materials.
Mm-hmm. Okay,
so only in case of mentors there is a possibility to interact with the mentor via the online platform or through email or Skype. They also use Skype for communicating with mentors.
Mm-hmm.
I would love to do a follow-up report to talk about some of the cutting-edge fintech innovations that we see in financial capability, because we certainly have a few examples here at CFI, and I think that could be the subject of a whole nother webinar. I think we have time for one more question. We have a hand raised from Juan Carlos Zamayoa. Juan Carlos, we're going to go ahead and unmute you now. Can you test your sound if you're still on the line, Juan Carlos? Juan Carlos, are you there? All right, well, it seems like his line might not be working so well, but Juan Carlos, we're happy to follow up with you later. We have time for one more question, so I'm going to go ahead and take my moderator prerogative and ask you, Justina, about, given that it's European Microfinance Day and given the momentum towards raising awareness of the importance of microfinance, what is your central message that you would want all microfinance providers in Europe and also around the world to know based on this research?
So the main message from this study refers to the business case, the viability of financial capability intervention. So I want to stress that there are ways to deliver financial capability programs on a sustainable way or find the ways to subsidize them. So it is doable. So that's the first message, and this message is important especially because more and more MFIs recognize that credit is not the only way to support entrepreneurs, that they need more than access to credit, that they need access to information, access to resources, to knowledge, and they need someone to support them in changing the behavior, in acquiring new skills. So MFIs start to appreciating this approach more and more. So my message would be it is doable, it can be done, and there can be a business model for combining financial and non-financial services.
Thank you. Thanks to all of you who stayed with us for this extra time. I think this was my favorite part of the webinar is always the discussion that we have, because we get to get into the issues that people really care about. For more information on this report, you can download it in the handouts box, but you can also go to bit.ly, that's bit.ly/FinCapBiz, that's FinCapBiz. And you can read more about the Fellows Program on our website as well. Thanks so much to our team here at CFI. Thank you so much, Justina, for a wonderful year and your CFI Fellowship. Thanks to European Microfinance Day for making us a part of their lineup of events. And looking forward to seeing you all at the next webinar. Have a great morning, afternoon, or evening, wherever you are in the world, and have a great weekend. Thanks. Bye.
Thank you.